I bought a tenant-occupied duplex in Cleveland for $12,100, and in this video, I'm going to show you exactly how much money I have made from it. What's up, YouTube? Welcome back to the Cleveland Investor Primer channel. My name is Rob, and I am here to provide you with unbiased, useful information on the topic of real estate investing in the Cleveland market. This is the only YouTube channel that you will find out there that is a Cleveland real estate focused channel that is totally unbiased, because I'm not trying to sell you a house, I'm not trying to buy a house from you, I'm not trying to manage your properties, and I'm not trying to sell you a course. I am just sharing information that I have gathered over the years and learned over the years from my own experience investing in the Cleveland, Ohio market, and I am looking to share that information with others so that you can learn from me rather than having to make mistakes on your own. If you are new to the channel, please consider subscribing down below and tapping the bell icon so that you'll get notified every time I publish a new video. And while you're down there, tap that like button if you don't mind. It's super helpful for the YouTube algorithm and will really help me grow this channel. I figured I would make this particular video because people all over the place are quite intrigued by how cheap the Cleveland real estate market is compared to other major metros, and they're really curious if it's possible to develop a substantial, stable rental income from these low-priced properties in the Cleveland market. The thing that is super important to understand about investing in the Cleveland market is that, yes, you can make a pretty substantial return, or you can lose your shirt, or anything in between, really depending on what property you buy, what area you buy in, and probably most importantly, how you actually manage the property. Because unlike buying shares of a publicly traded stock or taking a position in a real estate syndication, when you buy and own individual properties, it's basically like you are running your own mini business. And how you run that business will have a direct impact, a huge impact on the type of return that you get on your investment. I say this basically as a PSA to make sure that you understand that the types of returns that I've been able to get from my $12,100 duplex may or may not be the types of returns that you would be able to get if you were to purchase a similar property today. Now, deals like the one that I was able to get on this particular property don't come around all that often. Yes, it's true that you can certainly find some properties occasionally for under $20,000 in the Cleveland market. They are in most cases going to be either in pretty rough condition or in pretty rough areas, or a combination of both of those. And I was outrageously lucky to get the property that I did for the price that I did, because for less than the price of a used Hyundai Elantra, I got a very solid duplex in a well-kept C-grade neighborhood close to the Euclid border on the east side, with tenants already residing in both units. To make the deal even sweeter, this duplex was built in the 1990s, so it had far fewer decades to be beaten down compared to most of the other duplexes in the area, and it was new enough that it wouldn't have lead or asbestos hazards to ever have to contend with either. Basically, I was able to snag this deal for just $12,100 because it was a short sale, and I was an agile cash buyer who came to the table with no contingencies and an ability and willingness to be able to close however, whenever, and wherever the seller's lender wanted. Though neither my broker nor I were able to actually set foot inside the property prior to closing, I still felt comfortable buying it because, number one, the age of the property, and number two, the fact that one of the tenants was part of the Section 8 program, which is a government housing subsidy program that actually requires annual inspections to ensure habitability. So I figured even the worst case scenario for interior condition probably wouldn't be that bad. And then once the closing actually happened in 2015 and I officially owned the property, my broker was able to get inside of both of the units, and lo and behold, they were in pretty decent condition overall. One of those inherited tenants, who I still have as a tenant to this date, was an active Section 8 participant, and the transition of that tenant over to my account was pretty easy, so I was able to just start collecting cash flow from the Section 8 payments pretty much immediately. The other inherited tenant, on the other hand, was a bit more problematic, as this tenant was a previous Section 8 recipient who had been deemed no longer eligible but was still living in the property, and I guess hadn't been paying the previous owner for quite some time. So of course this tenant had to go or start paying. Fortunately, we were able to get that tenant out within the next few months, and actually the tenant left it in halfway decent condition. Though it was left kind of dirty and full of junk with a few repairs needed, nothing super major was needed in order to get it ready for the next tenant. To get the unit rent ready, it cost a little over $4,000, which entailed basically painting and cleaning and a bunch of minor repairs and updates to just make it shine and make it ready for that next tenant to move in. Once the rent ready work was done, my property manager got that unit back on the market and was able to rent it pretty quickly to a fantastic tenant who is still there to this date, more than 4 years in. Now, as we dig into the actual cash flow numbers over the years, you'll quickly see that this one really has turned out to be a winner. In 2016, the total gross rent received from this duplex was $10,716, and all expenses directly associated with this property, ranging from water bills to property management costs to taxes and repairs and insurance, totaled $10,538, meaning my total positive cash flow for the year was $178. Had it not been for that inherited non-paying tenant, and then of course the $4,000 bill to get the unit ready to be rented following their departure, the cash flow for 2016 actually would have been considerably better. But with the property fully stabilized in 2016, 2017 ended up being the year that the cash flow really started cooking for this property. In 2017, total gross rents received totaled $12,915, and outlays for expenses totaled $7,249, which means I had a total positive cash flow of $5,666 for the year. One thing worth mentioning is that I was able to get the property tax bill down considerably and even had a credit that would carry forward for a while due to disputing the value of the property and getting the property taxes lowered majorly accordingly. Then in 2018, keeping on that same cash flow trajectory, I received total gross rents of $13,847 and had total outlays for expenses of $6,716, which again includes literally every expense associated with operating this property, for a total net cash flow of $7,131 for the year. And then for the most recent full year of owning this duplex, my overall gross rent received in 2019 for this property was $14,246, and total expenses came to $10,235, so my total net cash flow came to $4,011. Expenses for 2019 were a bit higher than I expected due to some plumbing issues that came up throughout the year, and then of course some wasted water for a number of months that led to some pretty high utility bills until those plumbing issues got resolved. In any event, with another cash flow positive year on the books, the running total cash flow for my $12,100 duplex totals $16,986 for 2016 through 2019. While I actually probably could improve my cash flow quite a bit by increasing the rents even more than I've been increasing them over the years, I've chosen to keep the rents a little below market here because when you've got really good tenants, I think it is important to keep the rents a little bit lower so you can build goodwill, which means that they're likely to stay longer, and maybe even more importantly, they're likely to take good care of the property while they're living there. Of course, different investors have different philosophies and different approaches on this, and that's why I said earlier that when you are investing in real estate, you're running a mini business, and it's up to the individual investor to decide which approach is going to work best for him or her. Of course, in addition to the cash flow I've received, I've been able to get incredible appreciation on this particular property. This duplex that I paid just $12,100 for in late 2015 could actually fetch about $100,000 today, which, if you do the math, means that it's an annual property value increase of over 50% for all those years. That's the sort of return that can probably make Warren Buffett kind of jealous even. Now that the value of the property is back up to about what it was worth before the Great Recession, it's unlikely that we'll continue to see the types of huge appreciation gains in the coming years. Though I do think that the property is going to keep increasing in value, it'll probably be in the single digits for the coming years. That said, I do think I'm getting close to a turning point for this particular property, where I'll decide what move I'm going to make next with it. The first possibility is that I could opt to just sell it and take the big gain, either as a long-term taxable gain, which of course is taxed at a preferential rate, or instead sell it doing a 1031 exchange, whereby I roll the proceeds into another property and avoid paying tax on the gain at this time. The second possibility is to get a mortgage on the property to pull cash out now in 2020 while the rates are at historic lows, and then use those funds to buy another property or two or maybe even three to add to my portfolio. And then the third option, which is really just the status quo and would actually be the easiest but probably least exciting, is to just hold on to the property as is, as I've been doing, mortgage free, and continuing to rake in the cash flow from it for the coming years. Leave a comment down below and let me know what you think my next move should be on this property. And of course, while you're down there, tap the like button and the subscribe button as well. And even share the video with a friend if you know somebody else who might find this interesting. Until next time, I'm Rob, and this is Cleveland Investor Primer. Thanks so much for watching.